Thank you for joining us for our home buyers webinar. We have an amazing panel of guest speakers tonight to help us walk through the home buying process. I believe first up on our panelist is Joe.
Yep. I'm happy to take it away from here if you like.
Awesome, perfect. Take it away.
All right. So thank you everybody for taking time out of your busy schedule. I know that everybody's jam-packed and the topic of home buying just seems so daunting. So giving us a couple hours of your time is very much appreciated. I'm Joe Zampatella. I run the mortgage department here at the credit union. We've been working with the credit union for almost 30 years now. And essentially we work as the underwriters and the people who approve the loan for the credit union. We work with the staff directly at all of the branches, and then we also work with them in the back end so that you can get all of the documentation to us. We approve your loan, and in the end, we're trying to keep your relationship with the credit union so you make your payments to them. We've been working with credit unions for about 30 years. We're a Fannie Mae seller servicer. And essentially what that means is that we have the most competitive pricing in the market. So your interest rates are always going to be competitive with other lenders. You're going to see the full gamut of products that are available through the credit union from 30-year fixed, adjustable rate mortgages, government loans like FHA, VA, USDA. And then we also have a number of different custom products that are unique for just members, right? So only the credit union members have this special product availability. So if you talk to your friend down the street, they wouldn't be able to necessarily get the same rates and terms available that you would as being a credit union member. So through the credit union, you have access to financing in all 50 states. So you can buy a home in Alaska and Hawaii if you wanted to. We can still help you out. We've closed loan in every state. So have the confidence that you know the people that you're working with, that you know the process is going to be the same regardless of where you're buying. There's a 24/7 application. So if you're kicking around at home after a long day at work, you're welcome to go online 24 hours a day and look at all the tools. They have closing cost estimates, rate trackers. There's actually an application that you can fill out right online. And once you do that, you get put in contact with my team, which we are your dedicated mortgage experts. We're going to be here to guide you from the second you start an application all the way through your closing table. We're going to make sure that you have all of the resources that you need to be competitive in this market. A lot of people at this point, they're just kind of fact finding. They're trying to figure out exactly what they can qualify for or what the different programs are that are available. This is even if you're not ready to buy a home even this year or next year or anytime in the future, if you just have generic mortgage questions, feel free to email that mmfcu@membersmortgage.com or call that phone number that's right on the slide. And what we can do is we can go through different scenarios with you. We can answer all your questions to kind of determine where you are financially and then kind of help you going forward. Okay, perfect. Okay. So the programs that we most commonly write mortgages for are our conventional product, right? And so the conventional product is going to be by far our most popular mortgage product because it's what's most beneficial to the borrowers that we deal with, right? There are all sorts of different programs out there that you'll see, but this one is going to be what hits the most common borrower, right? So what we're looking for in most circumstances are a 620 or higher FICO score, loan amounts up to 806,500, and then you can do as little as 3% down payment. Right? Now, what a lot of people have heard, common misconception, is if you're buying a home, the minimum down payment is 20% unless you want to go with a government program. That's not true. With conventional financing, it actually affords the lowest down payment in the market, right? With 3% down. With other programs, you're going to be required to put at least 3.5% down. If you have less than 20% down, you're going to have private mortgage insurance, which is commonly referred to as MI or PMI. PMI was always a scary term. Everybody thought that made the loans unaffordable. Actually, what's happened now is that PMI has gotten so inexpensive that some people are electing to do less than 20% down and using their capital for other things. So don't be afraid if you don't have the 20% down. With 3% down and strong credit, you could have MI as little as $80-$90 a month, right? And usually on the high end, it's a couple $100s a month, but it's not prohibitive if you're looking at the scope of the purchase prices in this area. All right. Now, in addition to the down payment, right? So you're going to have a 3% minimum down payment. There's also going to be closing costs, prepaids, and escrows. And so a lot of people think, hey, listen, I have that 3%. It's in my bank account. I'm ready to go. That doesn't necessarily mean that those are all the funds that you're going to need in the transaction. So one thing that I would suggest that you do, go onto the website, again, 24 hours a day, and just look at closing cost estimators. You can put in your transaction, right? So if you were buying for 400,000 with 3% down and you're looking in the Springfield area, it will actually estimate the taxes, the mortgage insurance, the closing costs. Closing costs can run anywhere from $3,000 in excess of $10,000, depending on the scope of the transaction, the product that you choose. If you're paying points, there's a lot of different things that go into the closing costs. So it's a good idea to kind of get your, finances in a row by getting an estimate of those things. Now, if you start a pre-qualification application, we're going to send you what's called an itemization of fees. And that is something that you can review from the moment you actually apply. It'll give you probably within 5% accurate numbers based on your exact situation, right? So you're going to be able to see estimated taxes, estimated insurance, prepaid interests, the escrow amounts. Escrow accounts are accounts that we set up for you to pay your real estate taxes and your homeowner's insurance in the future. So we have to prepay those with or pre-fund those with some reserve assets. So all of those things are going to be estimated in this document, and it allows you really to get a strong footing of exactly the amount of money you're going to need to bring to the closing. If you just have the minimum down payment, there are programs available for you to help with closing costs. So there are programs available for you that will help with down payment assistance and things like that. But we don't really know if you're going to qualify for any of the programs until you fill out that application. So it is really important, especially in the planning phase, to go out, get an idea of where you stand financially, get an idea of the programs available and the costs associated with those programs so that you can be a more educated buyer when you're out bidding on properties. Another thing that I see very common is everybody looks online and just reads the interest rate printed on the website. Interest rates are not a one size fits all type of product. A lot of the time, what we're seeing is somebody goes in and looks at LendingTree or Quicken or Rocket Mortgage or whatever, and they come out with an estimate. That estimate is not always accurate, right? It always tells you go out, get a loan estimate, which is a formal document that is given to you by a lender, and it's going to stipulate the rate, the payments, the closing costs, the prepaids, the escrows, all of those numbers are going to be listed on this document. And until you have that, really what you're seeing is marketing, right? So like my marketed rate today is at 6.375. I can get that rate for a good majority of the borrowers on a fixed rate mortgage, a 30-year fixed rate. But that being said, if you're buying an investment property, if you're buying a multifamily, if your credit score is under 740, there are a lot of stipulations that go into those rates. So again, when you go out and you start this pre-qualification application, you're going to be paired with a mortgage expert who can kind of go through all of these things with you, discuss the available products, discuss the available rates and terms, and then you get an idea from your budget, right? And that's really when you can become more aggressive in your bidding. Okay. So everybody hears the term get pre-approved, get pre-qualified. What does that really mean? Right. So I think that a lot of people like to talk like they're much smarter and more important than they are. Getting pre-qualified is really not all that difficult, right? But the actual pre-qualification that you get can make or break your bidding situations, right? So when you're going out and looking at homes and you go to make an offer, first of all, a realtor is not even going to talk to you if you don't have a pre-qualification letter. And then depending on who gave you that pre-qualification letter, it could actually be seen as an asset in your bid or a detriment. Right. So what we're looking at from our pre-qualification is we're going to do a hard credit inquiry. Right. Every inquiry on your credit usually dings your credit about 1 to 3 points. So if you have 800 credit, I wouldn't worry about it. Right. It's not going to be materially impactful on your credit score. If you have a 622 credit score, then you have to be a little bit more careful. You do not need to go get pre-qualified with 70 different lenders. If you get hit 1 to 3 points on every one of those inquiries, you can do some serious damage to your credit score without ever, taking out a loan. So what I would suggest is we're all kind of playing by the same rules. Get pre-qualified with one lender, and then once you have a pre-qualification letter, then you can go out and get a loan. You go through the bidding process, you get a home under agreement, and that's really when you're going to do your rate shopping. Right. So some people think that, hey, the first day that I'm looking at mortgages, I'm going to go out and I'm going to rate shop every lender. I'm only applying with the lender with the best rate. That's great, but the interest rates move just like the stock market does, right? So today I might have the most aggressive interest rate out there, but if you call me 2 months from now, my interest rate may be one of the worst. So what you really want to do is you want to find somebody that you're comfortable with, somebody that can guide you through the process. And then when you do have a house under contract, I get it. Everybody wants to have the lowest interest rate available. That's when you can call somebody and go, hey, I'm buying a home for 400,000. I have 5% down payment. My credit score is 781. What I'm an owner occupant, I'm going to live there. What's your interest rate? Now, if the lender can't answer that question without filling out an application, stop talking to them. They don't know what they're doing, right? And what we try to do is we try to give you all of this information up front. We want to guide you from beginning to end because we know in the end, we're going to be very competitive on our interest rate. Our process is going to be very easy. And again, you're getting the personalized service that you deserve as a credit union member. Right? We're not mortgage bankers that are out there trying to close every single loan. We're going to be experts in this area. We specialize in New England, and we do a lot of volume here. And because of that volume, we're able to get discounted things for, discounted costs for like appraisals, mortgage insurance, even our attorneys, Donna Wexler, you're going to hear from her later. She's excellent. And because we send her the amount of business that we do, she gives us preferred rates because of our affiliation with credit unions and how she believes in the credit union movement. And so from our perspective, we're really trying to make sure that you're in a situation where you get the most competitive rates, the lowest closing costs, and the process is a logical and it makes sense, and that we can make sure that you get from that first day of bidding all the way through the closing table. So back to getting pre-qualified. Minimum down payment is going to be 3% for conventional mortgages. That's only for first-time home buyers. If you have owned a home in the last 3 years, you would not qualify. The minimum down payment would then become 5%. Okay. If you, in the last 16 months or so, Fannie Mae and Freddie Mac changed the down payment requirements for multifamily housing. It used to be 15 to 25% down. It is now 5% down for 2 to 4 unit properties. So previously, any multifamily would usually go with a government program. Now we're seeing more people going conventional for 2 to 4 unit properties. Again, minimum down payment is going to be 5%. And then for your credit score, 620 representative FICO, 580 for government loans. Another change that has taken place recently. It used to be if you had more than one borrower, we would use the middle score. Everybody has 3 credit scores. We would take the middle score of the lower of the 2 borrowers. Now it's actually changed where your interest rate is calculated that way, where you calculate the interest rate based off the lower of the 2 borrowers, but the average of the 2 borrowers is used for qualifying. So if you have one borrower who has 800 credit and one borrower who has 600 credit, even though that 600 is below the 620 threshold, your average credit score is 700, so you can still be approved. So even if you're not in the best financial situation, or one person has had some credit issues in the past, we can still go through all of those options with you. The best thing for you to do if you think you're in a situation like that is to go out and get pre-qualified. Because by getting pre-qualified, we can look at all of your credit situation now before you have a house under agreement. We can make credit recommendations to you so that you can get yourself set up in the best possible scenario so that when you do inevitably get a house under contract, you're able to get the best rates and terms available, or at least the best rates and terms available for you. Okay. Now, the third piece that's a little bit more nuanced is this concept called your debt to income ratio. Your debt to income ratio is the measurement of what you can quote unquote afford. All right. Now, what you can afford is actually a very personal question, right? Some people will call me up and say, Joe, I want to buy $1 million house. The only thing I can really afford is about $2,000 a month. And unfortunately, if you can only afford $2,000 a month, you can't afford $1 million home. Now, some other people also call me and go, hey, Joe, what can I get qualified for? And I tell them they can get qualified for a mortgage payment of $12,000 a month. Now, that's vastly higher than they would ever want to pay, but that is something I get you qualified for. So what we try to have in our initial conversations are, what are you comfortable paying? What is the price range that you're looking in? And we try to make sure that it's a feasible number, right? The monthly mortgage payment is going to be a math equation. It's going to be based on the product that you choose and the interest rate, right? And so we'll do that math equation out for you, tell you exactly what your payment's going to be. And then from there, you can decide if that's underwhelming, where you think you can afford more and get a larger loan, or if that's too much and we can back it down. Again, what you can qualify for and what you can afford are not always the same thing. So we want to make sure that you're in a situation that you're comfortable with the payment, you understand what it's going to be in the price range that you're looking at, and we'll guide you from the very beginning all the way to the end of the available products and things that may help you be more successful. And then the third or the fourth thing that we're kind of looking at is that you have the adequate assets for your down payment and closing costs. In some situations, you may be required to have additional assets as reserve assets in addition to the money that you need to bring to the closing. We're going to verify all of that stuff up front. Now, the reality is if you go out and buy a coffee, you're going to have a little bit less money than you did the day you applied. So it's not going to be something that we're going to nail down to the cent. We're going to look kind of in a ballpark. So if you say to me, hey, Joe, I have $250,000 at, Mass Mutual, that's great, right? If you only need $100,000 for that transaction, I'm not going to ask you for bank statements now. I'm not going to beat you up for documentation because I know that you have more than enough assets for the amount of money that we're looking for. But if you say to me, hey, Joe, I got $10,000 and we need to verify 9,999, we're going to get those bank statements now. We're going to make sure that everything is acceptable in terms of financing. And we're going to make sure that before we give you your pre-qualification letter, that you're set up for success, right? We don't want to put you in a situation where you go out with a pre-qualification letter that says the credit union's name on it, you go out bidding into the market, and then inevitably you end up getting denied. That's our worst case scenario. That's why if you go to Bank of America, they look at you and go, hey, do you have a pulse? Okay, here's a pre-qualification letter. That's not necessarily your best interest because the realtors of the world have seen Bank of America's process. They've seen how that deal can fall apart very quickly and how then you can't get any, customer service from it. We don't do customer service. We do member service over here. So we want to make sure that before you make a bid, that we're 100% certain that we can get you a loan. And then even from that it's going to be an excellent experience for you. So again, you're going to have a dedicated person who's your, guide all the way through the process. You'll know exactly who to call. They'll always be available for you. And then if they're not available, I'm always available for you. So there's always somebody accountable, which if you go to Bank of America, JP Morgan Chase, Wells Fargo, you're just another number, right? Rocket Mortgage, you're just another number, guaranteed rate. These are people that are large institutional lenders. It's about churning through the file. For us, it's about building a relationship. We want you to tell all your friends and your coworkers just how wonderful this experience was for you, because that's what you deserve as a credit union member. It's one of the benefits of being a member at Mass Mutual. Okay. Now, I've talked a lot about different requirements and the different programs. I just want to go over a couple that are very popular right now and kind of put an idea of what you'd be looking at. I was talking about conventional mortgages. That's the bread and butter mortgage. If you see a mortgage advertised somewhere in interest rate, most of the time it's going to be a 30-year fixed mortgage, or it could be a shorter term, like a 15-year mortgage. Make sure that you understand interest rates, what product it is when you're evaluating the interest rates. I've had more people call me go, hey, Joe, I see an interest rate here at 3% being offered by Wells Fargo right now. I want that interest rate. The problem with that mortgage is it's a 1-year mortgage, right? So unless you plan on paying $400,000 back by the end of the year, that 3% is not necessarily something that's going to help you. The average 30-year fixed mortgage right now is at 6.68%. That is down about 0.4% from the end of last year. So we're seeing some rate drop in the first quarter of 2025. Our 30-year fixed mortgage is at 6.375. Again, it's very competitive. That's what we're seeing most prevalent in the market. On any given day, just like the stock market, that could go up or down. And the beauty of working with the credit union is that we're always in it for your best interest. So if we can get you a better rate, fantastic. If we can't, we're certainly going to do everything we can to match a bid. Very popular in this market have been adjustable rate mortgages, right? Everybody hears adjustable rate mortgages and they flash back to 2008. The adjustable rate mortgages that are available today are nothing like the adjustable rate mortgages of the past. In the past, they used to have what's called negative amortization. And negative amortization is when every month when you make your mortgage payment, you're actually not paying enough of that mortgage to knock the principal down. Okay. So because you're not knocking that principal down, the balance of your mortgage would grow every single month. Now, that's totally fine if your house is appreciating at a rapid pace. But what we saw was that the housing market cooled down, the property prices started to dip, and then people weren't able to refinance that 1-year note or 3-year note, and they couldn't afford the new adjusted payment. That's not what we're doing here. We're offering adjustable rate mortgages that are fixed for 5, 7, or 10 years, right? After that time, they would reset at the US 1-year Treasury plus 2.75%. And they have caps, right? So what caps mean is that the rate can only go up or down by 2% on each reset. And the most that it could ever go up or down is 5% from the original rate. So today, on a 30-year fixed, you're looking at 6.375. On a 10-1 arm, so it's fixed for 10 years and then adjusts every year, that would be at 5.5%. So you save almost a full percent and it's locked in for 10 years. So that is a very popular product right now, especially where a lot of the smarter people than me are predicting that interest rates that are going to come down in the next 2 to 4 years. So if you're somebody that likes a little bit of security but doesn't want to commit to a 30-year timeline, that 10-1 arm is actually a nice product, especially for starter homes, condos, other products that that this isn't going to be your forever property. Whereas, if you're buying your forever home and your kids are going to move into the school system and everything is kind of lined up where you plan on being there for 15 plus years, you take that 30-year fixed mortgage, and if rates come down anytime in that 30-year period, you can always refinance it to take advantage of advantageous terms. So again, these are something that we're going to talk about from the very beginning of your process. We're going to look at your unique situation. We're going to go over the fixed rate options. We're going to go over the adjustable rate options. You do not need to make that determination on the first day. Okay. You can start with a 30-year fixed, and then when you have a house under contract, we're going to send you all the available products. We're going to talk about all of the features. And then you can look at me and go, Joe, actually, this house, now that we found it, this might only be a 7-year plan for us. I'd rather have the lower interest rate for 7 years. And then we can always adjust your product from there. What we try to do is we try to get you pre-qualified on the most restrictive product, meaning that it's the most difficult to get approved for. So that means if you then want to change to a less restrictive product, you're easily going to qualify if you qualify for the more restrictive. And finally, government loans. We've seen a kind of resurgence in government loans, FHA and VA specifically. VA is offered through the Department of Veteran Affairs. That's going to be specific for people who served. If you haven't served, there's also FHA options. FHA is Federal Housing Administration, offers mortgages for people with credit scores as low as 580. What we've seen is that it works in some scenarios where your debt to income ratio is a little bit higher, your credit scores are a little bit lower, your down payment is minimal, and your credit score is kind of a combination of riskier aspects. You might be able to actually get into an FHA loan with better rates and terms than a conventional loan. But for most people, if your credit score is over 660 or 680 and you have at least that 5% down payment, conventional is going to be the way to go. We do have these other options, but they're more of a as-needed product rather than what we think is the best for the member. Again, this isn't something that we're trying to hit a home run on. FHA and VA products tend to be higher margin products, so people who are pushing those are really focused more on revenue than they are on member benefit. For us, we think that this is a long-term relationship. Every mortgage that we do, we plan on doing at least 3 more for you. So we want to make sure that we always put you in the best place possible, and that you're in a spot where you're going to be calling us back the next time you want to refinance or buy another home, etc. Okay. The loan application process, it's, again, available 24 hours a day. Go right on to MassMutual's, the credit union's website, and you can fill out an application. At the bottom of this slide, MMFCU, it's a promo code. When you're filling it out, typically we charge a $25 credit report fee. Credit reports, I don't know if you know anything about credit reporting, but the cost of them have gone through the roof. If there's a joint application, the cost of a credit report is about $157 or so. So what we do is we charge a $25 fee up front. Now, because you've dedicated this time to listening to me talk, I very much appreciate that. So I want to give you this promo code, MMFCU. Go right online 24 hours a day. Once you start the application, all you have to do is create a username and password. At that point, we're going to have one of my loan officers or myself contact you directly. We can help you finish it, or we can answer any questions that you have. You can also use all of the tools available online at no cost. You can contact us with questions at the email previously, or if you just go right on the site, there's a contact form. If you just hit that, we'll be in contact with you. And I just want you to understand, when we're going through this process, this is the only time you do it, right? It's not like you have to fill out an application each time you have a home. You fill out the application one time and it becomes a malleable workbook. You then get assigned to a loan expert who can walk you through the different options available to you, go through the process with you. And that's the person who's really going to answer all of the underwriting, tasks. They're going to answer all of the rate availability tasks. They're the person that's going to handle it from soup to nuts and make sure that you're taken care of. Okay, so getting the introduction early in your house hunting journey is really going to help you kind of build a rapport, understand what's expected of you. Then we'll understand your scenario, and we'll be able to tailor the experience to what you need. And kind of similar to what I was talking about, you're going to want to meet with that loan officer, talk about your goals for the property, talk about where you're looking, what you're looking for, because a lot of the things that we're trying to do here is just build out as much of the framework that you need for this transaction before you even find a house, right? And then when you do that, it allows us to close loans faster than any other lender in the market. In New England, we can close a loan in as little as 10 days. That's legally the shortest amount of time that anybody can do it, right? I've closed a loan in 10 days multiple times. It is something that is virtually unheard of in the real estate market. Now, it may not be what's perfect for you in your scenario, but it is a possibility. Most transactions take about 30 days, and that we can do without any problem at all because we lay this foundation right up front, and we make sure that everybody in the transaction, every step of the way, that you can be prepared ahead of time. And then obviously, if you have questions, we'll address them up front rather than once you get your house under contract and you go to move forward.
Hi, everybody. Thanks for your patience today. My name is Dawn Ruffini. I am one of the broker owners at Remax Connection. I've been selling real estate for 24 years, and I'm licensed for Mass and Connecticut. So if anybody's looking in either of those states, I can help you. If you're looking for another state, I can't, but I can help find you somebody who can. So today we're going to talk about kind of like what my role is and what my job is in our working relationship. So as you're looking to buy or sell a property, you have an agent that represents you as either a buyer's agent or a seller's agent. And in your case, if you're looking to buy, then you'd be looking for a buyer's agent. There are some handouts that if you have in person here, I will get you some PDFs that you can share with the group that's online. There is a mandatory agency disclosure that anytime you meet with an agent, it should be the very first document they give you. It outlines their roles and duties and responsibilities to you, and it's something that you should be aware of on how you can be represented. We have had some changes in our industry, and now you will also see a mandatory, or not, sorry, I shouldn't say mandatory, but it is a buyer's agency contract. My company, we do require contracts to work with clients. So if you were to work with me, what we would do is we would schedule a in-person meeting for a buyer consultation. And there's a couple of reasons to do that. As Joe mentioned, it's important to make sure that you're already pre-approved, and because that's the good foundation for the team that you're going to build to help you buy a property. So we're going to sit down, we'll discuss your needs, what your financing looks like, what your requirements for your house are. Do you want a ranch? Do you even know what a ranch is? Do you want something that has 2 stories? What town or city do you want to be in? What do you want to be in proximity to? So all of those things are important for us to help you find the right property. Part of that presentation and that consultation goes over what this buyer agency contract does. It does lock you into working with an agent. So there's disclosures in this business, and then there's contracts. And you're always going to want to know which thing you have in front of you. If it's a disclosure, it does not bind you to anything. If it is a contract, it does. So if you have any questions on whether or not it's a disclosure or a contract, one, ask the person in front of you. And if they say it's a contract, you can always consult with an attorney before you sign it. And hopefully whoever you talk with as an agent tells you that. Okay. So actually I should explain a little bit more about finding this good agent. So part of working with a really good agent is somebody who's going to take the time to give you advice, guidance, and counsel. This is a stressful process, but it can also be a fun process. So it's going to depend on what your team is built around and how that's set up. I love working with lenders that are known in the market. As Joe said, if you have a pre-approval from a no-name or unknown, you are less likely to get your offer accepted. And I, in fact, have a listing right now that I got an offer that had a no-name lender on it, didn't know the loan officer, nor did the buyer's agent. So now you have two agents in a transaction who don't know who this lender is. My sellers have asked them to go and get pre-approved through somebody that we all know. So there can definitely be pros and cons to working with a lender, and you really want to be on the pro side. So again, part of when you're working with this agent, as Joe said, you don't want to start talking to multiple lenders and getting approved all over the place. You kind of want to be careful with doing the same thing with agents. Not all agents are created equal. Not all of them have the same education or qualifications. So you want to make sure that you find somebody that is well-versed in the area that you're looking to buy. But you also want to make sure that it's somebody that you get along with. Because if you don't, that stressful part of the process will also be miserable. So make sure that you interview some agents, ask them some questions. How long have you been in the business? What areas do you service? Do you have a list of inspectors and attorneys that you work well with? If they say yes, that's a good sign, right? I've worked with Donna for at least 20 years, and I've worked with Dave for about the same amount of time. Those are people that are in my wheelhouse, in my base of my team. I know if they're on any part of the transaction, if there's an issue, we have a solution for it. So make sure that you find somebody that you're comfortable to work with, because when you sign that buyer agency contract, you are locked for a specific period of time with that person. All right, so house hunting tips. Looking at houses looks super fun on HGTV because according to those shows, you look at 3 and then you miraculously found the house of your dreams, and it's usually less than the asking price, and you just move in and everything's great. So not exactly real life, but we can try to make it as seamless as possible. So it's important to know what type of house you want. Do you want something that you don't have to do anything to? Do you want something that you can put your own spin on? Those are things that we're going to help you with. Some of that does lean into what type of loan you have, because as Joe mentioned, if you have an FHA loan or a VA loan, there are certain requirements that the property has to meet. So those are things that I, as the agent, will be helping to guide you through as we look at properties. Where you want to live is super important. We can change lots of things about properties. We cannot change its location unless you have lots of money to pick it up and move it somewhere else. Also, not super fun or realistic. If there's special requirements that you have, we have some new rules in the state, if you want to say, where you can build an accessory dwelling unit on a property, as long as the property itself meets other, certain conditions. So if you have something that you need to put in in-law, or you have a teen that you love, but you want to love them from a little bit more of a distance, like those types of things are important. I say that in jest, but I have adult children that live with me that I love, but would love to love them from a little bit more space. So, those are the type of things that you want to share with us, because we can't help you find the right property if we don't know. So things to think about are your location, your floor plan. Everybody loves open floor plans until you try to put furniture in a room, and then you wish you had walls, or you have lots of people over and it's too loud. Overall square footage that you want. Do you want a basement? Do you want a garage? Does it have to have central air? Those types of things we can kind of work on. The things to not lean too hard into are, does it have wallpaper? Does the kitchen need updating? Because those are things that you can do over time. But it also helps you to build that sweat equity in a property. If you buy a house that's been flipped, as we call, totally renovated by someone else, you're paying a premium for the things that they got probably on a discount because it was on clearance. So keep that in mind when you're looking at things. Make sure that you're taking notes. We love to schedule second showings if we can. The market has settled itself down a little bit. During COVID, a second showing was like, there was something wrong with the house if you could get a second showing, because it was already gone before the open house was over. So just make sure you take notes. If you do want to take photos or videos there for someone who can't be there, we do have to get permission from the listing agent, so just be aware of that. But usually you can FaceTime somebody from there, and that works out pretty well. So this is where the real fun happens, is trying to figure out all the things to put in an offer. So in the little handout in the PDFs that you'll get after as well, there is a sample offer in there. So you can kind of get a little bit of a feel for it and get familiar. So when you find a house you like, we're going to make an offer. But in order to do that, we also have to know like what should this house appraise for. So we do try to take a look and see what's sold near there. If I was looking at it from an appraisal perspective, is their asking price reasonable? Is it below the market? So now I have to kind of, back end in some numbers. We're like, well, what would some crazy number be that somebody throw at it? Is it overpriced? Because the worst thing we can do is get you in a property that you love and then find out it doesn't appraise, meaning you're paying way too much compared to what the lender is going to be willing to back through a third party. Then when that happens, we have other negotiations we have to do. But the things we have to think about going into this is how much are you going to put down for your earnest money deposit? Basically, that's the skin in the game that binds you together with the seller that says, this is my good faith money and I'm putting X number of dollars down. We want to look at your inspection contingency. I don't know if you've heard, but again, some fun changes in the state. During COVID, there were a lot of buyers that were waiving inspections and it created problems. I've luckily, in the amount of time I've been selling real estate, only had one buyer waive inspections, and it wasn't even during COVID. It was like 2008, and the grandfather was a contractor, and she insisted it would be fine, and I had a heart attack the entire transaction. So, inspections are important. Dave's going to get into what that does for you, but, in Massachusetts, they've now changed the laws that the seller can't tell you that you can't have an inspection in order for them to accept your offer. We're still trying to figure out what all that looks like. Just know that you have a right to inspection, okay? Your mortgage contingency, that's where we're gonna put in dates that say by X day and time, you're gonna have the commitment from Joe that he's not personally lending you the money, but Mass Mutual Credit Union is. And, and that way we can tell the seller, look, we're gonna do this type of stuff by this date. This does say an average of 6 to 8 weeks to close. That's typically because there's a lot of other things going on. If the seller's got another property that they're buying, they want to line up dates. Donna's team needs to be able to have enough time to do title exam to make sure there's no issues there. And then, if all of things are going well and we've got that all together and we make that offer, the seller could come back with a counter offer. Then we're back into negotiations again. We're going to have Donna review our offer if we have to put some abnormal language in there. There are times when we have to do that, and I'm not an attorney, so I can't write any of those fun things, but I can put a sample together and go, Donna, how does this look? And then she tells us whether or not we're in good shape there. Once your offer is accepted, we typically have 10 to 14 days to do your inspections. And once you're through that, then we've got Joe's ordering the appraisal to make sure that that's going well, and he's working on the mortgage commitment. You're going to work on getting your insurance for the property. You get a binder which says, yes, this amount of money has been paid. We're going to insure this property for X number of dollars. Then that goes to Joe and his team. You're going to get your utilities transferred and all the fun things that go through that. We've got to walk through and eventually closing. But in between all of that, there's a lot of other things that happen. And Dave's going to talk to you about what the inspections look like, because this is really fun stuff. I always learn something.
Yeah, thank you, Dawn. So it's very intriguing how things change on a regular basis. FHA just came out with a change on wells at the beginning of the year. Well, after me conversing with them back and forth, they've now changed it again as of 3 days ago. So a lot of interesting changes constantly occurring in the world of inspection. So first, let me start by asking all of you to think about the house that you're looking to buy. When you picture that house, is there a 2-car garage? What color might it be? What style house is it? Maybe what neighborhood it's in. Dawn had mentioned that don't worry about wallpaper and colors because they're always changeable. And that is so true. When I bought my house, it was in the neighborhood I wanted. And you can't relocate a house, certainly not easily. And and it was the style house that I wanted, and it had in it what I wanted, but I hated the white color, just hated it. So I didn't want a white house, yet I knew I was getting a good deal in the area I wanted, everything else that I wanted, so I bought a white house. So come 4 or 5 years later, I changed the facing on the front of the house to stone for about $9,000. I put on new garage doors, a mahogany color, and a new front door, and voila, I have a completely different house for 15 grand later. And here I am with the house that I wanted that has increased in value more by far than the little bit of money that I put into the siding and the doors and such. So all of that is changeable. Now, when you visualized this house that you wanted to buy and all the neat things, did you ever think about, I'd like to buy a house with a failed furnace? I'd like to buy a house that's got an electrical fire hazard. What would be really cool if I bought one that had a plumbing leak in the wall? Well, no, I can't imagine that you would. So therefore, when you think about buying the house, again, start out with your realtor, and Dawn did a great job of laying that out and what your steps are. When it gets time to verifying that you're not going to run into those issues, that's when it's time to do your inspection. And as she mentioned, there have been many people that decided to not do an inspection on their house, no matter what state they were in, because of bidding wars. And so many of them have come back with nightmare stories. We constantly hear about them week after week. Foundation failed, this failed, that failed. Well, it's too late. After you bought it, you own it, and you own everything that goes with it. So the time to do it is before you buy. And from there, you get to not only learn about the good and not so good things about the house, you get to learn how the house works and what it will take for you to maintain and care for that investment for years to come. So that's the purpose and the point of the inspection process. All right, so from there, then how do you find an inspector, and what items would you want inspected? Meaning, most people want the structure, electrical, plumbing, HVAC systems of the house. Okay, well, you haven't mentioned wood-boring insects. You haven't mentioned radon gas. You didn't mention mold, because those are all outside the scope of the state standards of practice for home inspectors. So what you really want to do is find a company that can do all these things for you if necessary. Book your inspection, maybe book a termite, because that's probably required by the mortgage, and get into the inspection process and let the inspector help you with what else you might need. And that way you're not spending money unnecessarily, but you are doing all the things that have been seen by the inspector that can bring value to you. And then we can go ahead, and if we need to, do a mold test, and if we need to, a sewer scoping. And these are all the items that can help protect you, help teach you, so that you know where you begin when you buy that home. I do suggest that you do your homework prior to getting your inspection. I think that, first of all, in the state of Connecticut, the Commonwealth of Massachusetts, Georgia, most states, Phoenix, Arizona, they do require licensed inspectors. However, not all licensed inspectors are created equal, and not all of them are going to provide you with the job that you need. So it's best to find out what they provide you with and how they're going to assist you in the process so that you feel comfortable when you hire them. And when you do that, you want to be able to make sure that they're going to be with you, or you're going to be with them during the inspection process. You can ask questions, and they're going to be able to help teach you about the house, not just simply write up a checklist form and send it to you, and then you go from there and you're on your own. What we like to think of it as, that we are your inspection company until you own the home, and then we are your consulting company after that. You're welcome to call us. I had a woman call me a little bit ago, and she called up and said, Dave, you remember you did my inspection and you said something about the pink bathroom. So I said, pink bathroom? When did I do the inspection? She said, oh my goodness, it was 21 years ago. I said, oh, well, I'm going to have to look that one up because I couldn't remember doing that particular inspection. But we're there for her, even 21 years later. And I started this company in January of 1982. I have a team of terrific people. I've got now 12 inspectors, 2 engineers, 2 septic people, and 3 environmental techs. So we've got you covered on anything that you would need, and we're here to stand with you throughout your home ownership. If you could go to the next slide, wonderful. Very important for you to understand there's a time frame. Once you get your contract in place, most of the time it's 10 days. Sometimes it's 7, sometimes it's 14, most of the time 10. We got to be called right away because particularly as we go into the busy season, we're going to be booking a lot of inspections. So it's important that we get it at a time where you and us can coordinate it, you and I can coordinate it and get out there at the same time. It's kind of nice if you can ask for the seller's disclosure form just to get a little familiar with when and how they did certain things since they owned the home. Now, a lot of people ask, so Dave, what's the cost of an inspection? All right, well, that's going to depend on what you want. If you want the standard home inspection, which covers your structure, electrical, plumbing, and HVAC, take a typical 2,000 square foot house, and it's going to run you, depending on the area that you live in, $500 or $600. When you start adding on mold and termite inspection and maybe radon test and so on, things that are important to you, you could be upwards of $1,000. So I tell most people plan on that. It may not cost anywhere near that, depending on your situation. But if you're planning on it, it's always better to be prepared than not prepared and want something that you aren't prepared to give. So plan on that from a cost factor. And the next thing is your inspection should be somewhere around the 3-hour mark. Sometimes it'll be 2.5, sometimes 3.5. And interesting, we have some sellers say, well, I thought it was going to be 15 minutes. Well, I can't tell you much about your house in 15 minutes. As many years as I've been doing it, and it's 43 now, I've never been able to do an inspection in 15 minutes. We need the time to properly evaluate and go through those conditions with you. Next one. Okay, so then when we do the inspection, we're going to provide you with a report. That report from company to company, I've seen some. In fact, I was just involved with a court case where somebody was going after an inspection company, and I don't like doing those, but in this case, this inspector did not meet the standard of practice set by the Commonwealth of Massachusetts. And it really put everybody in a tough predicament. It was a checklist, no pictures, no written information. And some of the times you couldn't tell if the check mark was in one box or another box that was right above it. And it really didn't provide the client with the detail that they needed to make a proper decision. So they ended up buying the house. They felt pressured to get into the house. And sure enough, they had problems with their foundation. The house was moving, and they weren't happy about the cost of $80,000 for repairs. So I certainly understand that. Pick wisely. You have one shot at it, and you want to make sure that you get the people that are qualified to do it, and that you get a report that's legible to you. And of course, ours has photos, it has videos at times, and it has full written explanations. And what we teach all of our inspectors is, what do you see? What can't you see about that particular item? What does it mean to the client? And what's recommended? And doing that gives you a full explanation of what it is that you're looking at. And I talked about the other inspections that are available: termite, radon, foundation inspections. The foundation inspections could be new to you. There's now been some concerns with something called peritite in the foundation. And is it cracking as it converts from peritite to iron sulfide? And if so, then what do you do about it? What does it mean? Well, it takes somebody highly trained to do that. Most inspectors and engineers, it's not in their schooling, but it is in ours because it's something that we're very familiar with. We've been certified to do so. And so getting that would be important if you're in the Connecticut and Massachusetts area. So that covers the inspection items that you could get. And if you have any other questions, you certainly feel free to give us a call and we can guide you whether we did the inspection for you or not.
Hi, everyone. My name is Donna Wexler. I'm an attorney at Bacon Wilson, and we've had the opportunity to work with the credit union for 30 years now, and I can't recommend them highly I can't be more optimistic about that, having trouble with my words tonight. And as Joe mentioned, I truly am an advocate for financing with a credit union. If you have a credit union available to you or a local lender, that's the best place to go for your mortgage. And what Joe said is really true. You are a valued member who is treated great throughout the process when you're working with the credit union. So part of, and something that Dawn mentioned when she talked about her role, is the team that she's part of. And I always use that term as well. We're a team. When you start your home buying process, you really are putting together that team. And your team includes your lender, your agent, your inspector, and your attorney. So when you're looking for an attorney, what you want to do is find someone who practices real estate law. There are a lot of attorneys out there who do a number of different things. I would never represent someone who was convicted of or who was charged with murder. I don't have that experience. You don't want to go to your cousin who is a litigator and practices in defends the criminal court, because they don't have the experience that you need when you're buying a house. So just, that's something important to look at what type of experience that attorney has, and then contact that attorney from the beginning. It's important to have an attorney involved right from the beginning. As Dawn mentioned, you're getting disclosures as soon as you start your home buying process. You're getting information from your lender, you're signing contracts. So it's important to have somebody that you can call and talk to about these if you have any questions, because from the beginning, you're signing contracts, and those contracts set up obligations on your part. You want to know what you're agreeing to. So whether, just as Dave said, whether you hire him or not, he's going to help you through, he'll answer your questions. Same with us. Give us a call right from the start. If we don't represent you in the transaction, that's okay. But we want to make sure that you're educated. So contact the attorney from the start. And what the attorneys do from the beginning is review the offer and the purchase and sale agreement. So Dawn mentioned that first step in your process is going to be that offer. And that offer has all of the elements that she mentioned, what the terms are going to be, what your contingencies are going to be. And if you have any questions about how that's worded or what you're trying to get across, it's good to talk to an attorney from the start. Oftentimes, Dawn and I will have that conversation just to say, how would you read this? How would you interpret that? So it is important. Then after the offer is the purchase and sale agreement. that's a lengthier version of the offer, and that's what both parties sign after the offer has been accepted by the seller. After that purchase and sale agreement is signed, the attorney starts doing what their responsibilities are through the process. And I always think about the home buying process as sort of running on parallel lines. So while you've done your search with Dawn, you found a house, she's working with you, coordinating the inspections and making sure that you're getting done what you need to do. You're also working with the credit union or a lender to finalize your loan process. You're reviewing the appraisal, you're going through all of that. And simultaneously with all that, Dave's doing the inspection. So everybody's working on parallel lines. What we're doing is collecting the information that we need about the house to make sure what you're buying is what you think you're buying. So we want to make sure that there are no outstanding taxes or municipal obligations. So we obtain that information from whatever city or town you're buying in. We get something called a municipal lien certificate. We are doing a title exam. We want to make sure that the title to the property that you're buying is good title, that there are no liens or encumbrances that would affect your ownership. In Massachusetts, the requirement, and Connecticut, the requirement is that we search at least 50 years back. So we go back to at least 50 years prior to the time we start the title exam, or to what's called a source deed. And then we make sure that through the years, there are no issues that have arisen that would affect the title. So we look at probate, we look at, again, the municipal documents and what documents are recorded in the Registry of Deeds or the town hall if you're in Connecticut. We also, in Massachusetts, obtain what's called a plot plan. Connecticut does not have that same standard, but if you're buying in Massachusetts, that's something that we obtain. We make sure that the house is on the lot. There are no encroachments by your neighbors. It's a valuable tool. So what we do after we obtain all that information, we review the title exam. And again, if there are issues that come up in that title exam, we work to resolve those, because we will not close until the title is cleared and we can certify to the bank, to your lender, to the credit union, and to you that the title is good and that we don't see any issues for you moving forward. So sometimes if a title exam comes back with issues, your closing will be delayed. And that's expected. And it's good that we caught that before you bought the house. So that's something to keep in mind. We coordinate the closing. The buyer's attorney coordinates the closing with the lender, with the seller's attorney, with the real estate agent. So we sort of oversee the process and get everybody on the same page. We work with your lender to prepare the paperwork for the closing, to work out the figures. If there are other agreements that come up throughout the process, either after the inspection or, you want the seller to do something before the closing, the seller's agreed to do that. We may be drafting additional documents to memorialize those agreements. We coordinate all of the payments. As a settlement agent, we collect all of the money and then we pay out all of the money to the people who are to be paid, to the seller, to the seller's attorney. There are a lot of checks that go out after a closing. So we make sure all the taxes are paid. So we may be making tax payments, final water and sewer. And then the process to document, to confirm that you are now the owner of the property is to record that deed. The deed is the document that puts the title into your name. So we're going to record the deed at the Registry of Deeds or the town hall, and that confirms your ownership of the property. There are also other documents that get recorded, mortgages, declarations of homestead, and we're coordinating all of that. There's also something that's issued at the time of a purchase. It's called title insurance. So that is exactly what it says. It's insurance on the title. your lender is going to require that you have a title insurance policy that protects them in the event that there is a title defect that shows up after the closing. And the title insurance will protect you and will protect the lender from that. There's also an owner's title insurance policy available, which we highly recommend. Any attorney that you work with is going to provide you with information about an owner's title insurance policy prior to the closing. It's a one-time premium and it's in place for as long as you own the house. So it is a great thing to have. It insures against anything we wouldn't find in a title exam. And there are things lurking that you can't even anticipate. And again, that may be something from a prior probate, from a divorce, from a foreclosure. So there's a long list of those. So what your responsibilities are when you're buying a house, you need to be involved in the process. And so you're going to be involved from the start when you're signing up with Dawn, signing that contract. And what she says is very important. Work with one agent, be comfortable with your agent, because that person's going to be with you through the process. So you need to participate. It's very important that you attend the home inspections, because when you're walking around with Dave, he's going to point out things that will help you in the future, even if they're not problems now. He's going to educate you on what the house is all about. Work with your lender. Your lender's it's going to seem overwhelming because they do need a lot of information. But as Joe said, if you start with them in the beginning, they're going to be getting this throughout the process and you're not going to feel overwhelmed. But you have to give them what they ask for so they can get you to the end. So communicating with everyone is really important. If something comes up that stands in the way of the closing, if there's some issue, share that issue, especially with your attorney. We're going to help you through. If we need to delay something, if something's not working, it's anything you talk to your attorney about is confidential. And it's important that they're brought into the process if there's something that concerns you. And of course, you're going to attend the closing, you're going to sign your paperwork, and that's when you buy the house. So that's what your responsibilities are. A few days before the closing. So we start out with all of those disclosures we talked about in the beginning. Joe mentioned giving you those estimates. They're going to follow through. All of those disclosures are going to follow through the process. So by the time you get to the closing, you're going to have a really good sense of what the closing's all about, what your financial obligations are. So a few days before the closing, you're going to review those numbers with the attorney so that you know what you need, how much money you need on the day of the closing. And what that number is going to include are your closing costs, whatever the balance of your down payment are, any escrows that are collected, that's money that's going to be collected up front, maybe for taxes and homeowners insurance. We're going to adjust figures for taxes that the seller paid. If the seller leaves fuel, oil, or propane in the house, you're going to reimburse the seller for that. And all of those figures are going to be put together on a closing disclosure. And that's going to show you what you're paying for the house and how much you need on the day of the closing. And again, you're going to have that information at least 3 days prior to closing. And that's your opportunity to ask your lender to clarify anything, to ask your attorney. You're going to arrange for a final walkthrough with your agent, and you should participate in that as well. Make sure everything is what you hope it's supposed to be with the house that you're buying. We had a transaction last week that got delayed for 3 days because the house was almost full, despite the seller telling us that there was just a pile of things that they had to get out. 5 mattresses is not a pile. So, but that's why that final inspection is really important. Because you want to make sure everything's out and there's been no damage since the last time you were in there. You're going to arrange for your funds for closing. I would say probably all attorneys' offices require either a certified check from a bank or a wire of your funds. So if you're working with the credit union, it's great. They can set you up for a wire to your attorney's office. They are very user-friendly. So the current market conditions, Dawn and I could talk about this together. As Dawn mentioned, the housing inventory, things have lightened up a little bit. I think there's still more people looking to buy than there are houses available. Although now that it's spring, I think it's opening up a little bit.
Yeah, this is the first time in several years that we're actually starting to have a spring market again, which is kind of fun to see, because we haven't had one in a while. And there were 3 houses for sale 2 weeks ago in East Longmeadow in the entire town. And now there's like 10. And I was like, this is like Christmas. It's like there's stuff to show people. So the market's starting to loosen up a little bit. It usually happens around this time of year anyways. Joe, do you want to talk about the interest rates?
Sure. So there's a couple of things that I want to talk about. We're still seeing multiple buyers per listing, right? So there's still a deficiency in inventory, which it makes sense in a appreciating market. So the houses are getting more expensive. Connecticut and Western Massachusetts have lagged the Northeast a little bit in price appreciation until the last 18 months, where you've seen an explosion in the value of the homes. Even like 2 years ago, the average home in that area is probably in like the 275 to 325 range. Now we're seeing it closer to 450, 500-ish, which is really putting a strain, especially on that first-time home buyer. So every little bit counts, right? Where you can save money. You're seeing interest rates coming down a little bit from highs. After the election, we saw a big spike in the 10-year Treasury. A lot of people have been paying a lot of attention to what the Fed is doing with interest rates, although that does kind of give an overarching theme for the economy and inflation and different financial aspects. It doesn't directly impact mortgage rates. What really impacts mortgage rates is that 10-year Treasury bond. You can go on any finance website and look at it. If the 10-year Treasury is going up, mortgage rates are going to follow. If 10-year Treasury is going down, mortgage rates are going to follow. Coincidentally, gas prices actually kind of mirror mortgage rates as well. So when when you fill up your tank and you go, ooh, that was expensive, you're probably gonna have that same reaction to mortgage rates. Right now, you're seeing a little bit of a trough in gas prices, and again, mortgage prices are kind of coming down as well. You're seeing the 10-year Treasury kind of even out at 4.3%. It's been there for a couple weeks now. Kind of ebbs and flows, just like the stock market, but it's kind of sticking around that data point. The only problem with the kind of tracking that is that it's a volatile index. So depending on what's happening in like the socioeconomic world, right, with President Trump and his administration, there's a lot of variability. So what you got to kind of prepare for is that whatever you see today for the interest rates is probably not what it's going to be tomorrow. Now, on any given day, it might be up or down. So again, when you're looking at interest rates, it has to be on a horizon basis. You can't just do it as a point in time unless you have a house under contract. You cannot lock in your interest rate until you have a house under contract with a determined closing date. So until you have that signed offer, there's really not a whole heck of a lot you can do in terms of locking in your interest rate. You're going to kind of ride the market up and down. But again, you want to get yourself in a situation where you know what's expected of you from a mortgage process and from a lending process, so that you can understand where your high end and low end are on your bidding ranges, and it makes you more competitive as a buyer. This has been kind of a rough winter. It's been cold, and it still remains cold. And until everything gets green, you probably won't see that huge flush of listings. As interest rates come down, it's going to unlock a lot of inventory. Unfortunately, there's a lot of people out there that have interest rates in the 2.5% to 3% range. It's going to take a heck of a lot of movement to get those people to sell their home, right? Unless they're walking into $200,000 in student loan debt or 50 grand in credit card debt at 30%. That mortgage is one of their most valuable assets. So they're going to sit on that house for as long as it takes for them to find a better scenario. What we're looking at is an interest rate that starts with a 5. If we can get a 30-year fix at that 5, you might see a lot of these people, kind of unlock from the market, especially if they have home equity lines. Home equity lines are more directly tied to the Fed. So in that rapidly appreciating market a couple years ago, where interest rates went from 3% to 7.5-ish%, the second lien mortgages went even higher than that, 8-9%. At some point, there'll be a market where the second mortgages and the first mortgage blended together will be kind of similar to what we see in available rates in the market, and that's when you'll see more listings. It's definitely better than it's been the last couple of years. There are more homes, there are more starter homes. There's still a lot of cash and there's still a lot of competition. So getting all your ducks in a row really helps. One thing that I want to talk to about with the attorney too, specifically, Donna said getting your team together. Talk to your lender before you choose an attorney, right? Donna and I have been working together for a long time. We know exactly how things work. We know what the fees are going to be. We know the process. And what we do is we work together, and she's agreed to adhere to my fees, right? Whereas if you hire your own attorney, that attorney can charge you whatever they'd like. So what ends up happening is, when you are buying a home, if you put 20% down, you're buying 20% of it. I'm buying 80% of it as the lender. So our risks align, our goals align, our fears align. So if we have the same attorney, there's no conflict of interest there. It's actually a great way to save $500 to $2,500, depending on what attorney you choose. It streamlines the process. It keeps the process moving, and there's very little breakdown in communication, so that you feel like everything that is being said to you is all kind of pointed in the same direction. You pick a independent attorney that's your cousin or friend or whatever. That's great. You might save a couple bucks, but the process could break down, and then you could actually put your deposit money at risk. That's always a big fear with kind of bringing more people into the transaction. Now, you have every right to choose your own third-party attorney, but unless there's your father or your wife or something like that, it really doesn't make a lot of sense to bring in somebody who's just going to add complexity to the transaction. Okay. Now, the timeline, I think, is something that's really important to just go over one last time before we take everybody's questions. The timeline is going to go quickly. We're seeing, again, multiple bid situations. There's a lot of people buying for these homes. So one thing that you can differentiate your bid with is a shorter purchase timeline. Now, when you shorten the timeline, that means that things become a lot more aggressive in the pace. So what I always recommend is to go out, get pre-approved now, way before you find your home, even before you start looking homes. Get pre-approved, understand where you are financially, because it puts you in a situation where you're not wasting your time looking at homes that are well without outside of your means. You can get aggressive when you do find a home that is within your kind of bracket, and it gives you and your realtor better execution on finding homes that you may want to buy. Right? If your range is too large, it's going to be very difficult to kind of hone in exactly what you want to search for. But if you can get your search down to a certain cluster of towns and a certain price range with certain characteristics, you set up all sorts of different checks for that type of property. As soon as it comes onto the market, you can hit the ground running. So you want to make sure once you get pre-approved, that's when you can start interviewing your realtors. Dawn's fabulous, right? I mean, she has been in the industry. She knows her areas. And what I love about hearing her talk is that it's not about the deal, right? It's never about, hey, I got to get every single deal. It's, I'm an expert in certain areas. So if you're in those areas, you want to work with somebody like her because she knows it better than somebody else, right? Whereas if you call me and say, hey, Joe, I need a loan in Ohio, I could do a loan in Ohio. It's not going to be the same as if I'm doing a loan in Connecticut and Massachusetts, because that's where we really have our main focus. So from my perspective, although we can lend in all 50 states, find the experts, right, that are going to take care of you, that understand your situation the best, who can guide you all the way through that process, right? So then you find your realtor, you find your lender, and then you find your realtor. And that's the process you start looking at homes, right? You look on Redfin and Zillow, and I'm sure Dawn has technology that she can send you listings. And we're going to make sure that you get all of the opportunities to see the homes as quickly as possible. It's the faster you can find the home and identify that you're interested in it, the quicker you can get in, see it, and hopefully get your bid in before everybody else. At that point, you're going to find the house of your dreams. It comes in, you're taking a look at it, you're going to write your offer to purchase. Okay, that initial offer usually comes with some sort of binding deposit. It's relatively inexpensive, $1,000, maybe $5,000, $10,000, something like that, to differentiate yourself from everybody else. But it's a binding deposit. In Massachusetts, it's a 2-stage contract. In Connecticut, it's only a 1-stage contract. So you're just coming in, you make one signed offer. You might not even talk to your attorney yet before you sign it, which is scary. So that's why you want to make sure, have your attorney lined up, have your lender lined up, because as soon as you make that offer, it becomes a real transaction. Okay, so you make your offer, you might have some counter offers. You're going to want to have flexibility at this point, because maybe you want to close in 2 weeks. but the seller's been in the house for 40 years. That may not be, feasible for them. And even if you have the best bid, if you give them terms that are too strenuous on them, they may not accept it because the money's not as important as their leisure. Vice versa, there could be somebody that's already moved out of the house, and the quicker you can close, the better. They might take a lower bid because you can get it in 2 weeks. So that's where it really makes sense to talk to the realtors, have them discuss the motivations of the sellers, and tailor your bid to kind of meet what they need. Once you have it under contract, you've negotiated the closing date. At that point, you can call your lender to start talking about interest rates, get your interest rate locked in, your products, so you can go over all of those options with them. At that point, once you lock in your interest rate, we're going to order an appraisal on the property. We'll order a title search on the property, and then we're going to put your loan into process. At that point, we send you a list of documentation that we need. Not going to be anything too crazy. We're going to verify your income. We're going to verify your assets. We're going to make sure that we have all the contractual information with the purchase and sales agreement and the deposit checks, and make sure that you've given all of that money. We're going to have a couple of forms that we need you to sign. And from there, once we have everything reviewed and we've gone through all the underwriting and approval processes, at that point, we have a lot of simultaneous things happening at the same time. Donna's going to be running the title search. We're going to be having an inspection done on the property. All of the smoke certificates and all of the process from the realtor side are all going to be taken care of. But we're all working in conjunction with each other as a team to target your closing date, right? So now you've gone through the inspection, you've gotten your rate locked, you've gotten all the documentation requests, the appraisal has been ordered, your attorney has gone through all of the initial offer, they've reviewed this new, longer, more complex contract called the purchase and sales agreement. Once that's signed, now it's an official deal, right? That's when we're ready to hit the ground running. The appraisal can be completed at that point, and then the appraisal comes back. We review all of your information. We send you the additional documentation that we need, if anything. If not, pretty simple. We give you your commitment letter that says that, hey, Members Mortgage Company and Mass Mutual Federal Credit Union can give you a mortgage with these terms up until this date, right? And any conditions of the loan will be listed in there. You'll also have a form to give to your insurance agent. Insurance has gone crazy, everyone. Everybody thinks that they can just wait till the very last second to get their insurance settled. Do not wait. Do not wait. Insurance is crazy right now. Find an insurance agent. You can choose whoever you'd like, as long as it's a standard HO3 homeowners or HO6 if it's a condo insurance policy. It's most likely going to meet our requirements. So it's better to get that lined up, get your insurance bound. Because listen, if the house doesn't work out for whatever reason, it's not like they're going to make you pay the insurance premium. Get it lined up. Make sure everything's ahead of schedule, so that when you do get your commitment letter and you're clear to close, you can just send the insurance right to the attorney. The attorney puts together all of the final fees. They send them to me. I then turn around and send all of the final costs on that closing disclosure that Donna talked about. I'm going to send that to you. You're going to review it with your attorney or with Donna, with me, with whoever is going to advise you through it. Right, we're going to make sure that you understand all of the costs associated with it, the amount of money that you need to bring to the closing. Then that usually takes place about a week before the closing, a day or even the morning of the closing. You're going to do your final walkthrough, and you're going to make sure the property's still in the condition that you were expecting. There aren't 5 mattresses sitting in the middle of the living room. Right, you'd be surprised how many pool tables get left down the basement, or how many snow blowers are left outside in the backyard. All of those things, we're going to make sure the house is in the condition that you want. Once you've gone through that, everything looks good. You sit down at the closing table, you sign all the paperwork. Once it gets recorded at the Registry of Deeds, they hand you the keys, and now, congratulations, you're a homeowner.
So there's a couple questions. We're gonna get to those.
All right, so the first question is, in what states does the credit union offer mortgages? And what are our maximum loan amounts? Or he asked, what is our biggest loan?
Sure. So there's a couple ways to answer that question. Fannie Mae has a standard conventional loan limit of 806,500 this year. That changes every year, but that's available in every county across the country. In certain areas of the country where they deem it higher cost, there's a second tier that can go as high as like 1.2 million in certain areas. Now, some of those areas are like LA, Nantucket, Fairfield County, certain areas that are higher loan limits. But depending on where you're looking, the loan limit may not be as high as 1.2 million, but this is just for single families. If you're looking at 2 to 4 units, there's even higher limits. So that's just for conventional financing. We also do offer jumbo financing, and it's on a case-by-case basis. We have to kind of review it. I would say if your loan amount's under $1.5 million, we should have a place to place it. If you're looking for like a $4 million loan, probably not within our wheelhouse. Okay, and we lend in all 50 states. So if you do have a loan in Ohio, I know I said that we're not the experts there. Listen, we've gotten a loan closed in every single state in the union. Happy to help you out and make sure that we have all of those fees associated with transactions. Transactions are different from state to state. Products available are different from state to state. So especially if you're looking outside of New England, we want to make sure that you apply early so that we can go over all of the different differences between your local market and our local market.
And the second question is, what is your 10-year plus range to arrive at interest rate applicable?
So all of our rates are factored through a secondary market. So we're a Fannie Mae seller servicer. So Fannie Mae is a government sponsored enterprise who creates liquidity in the mortgage market, right? So in theory, if all of the banks and credit unions of the world ran out of money to buy loans, the mortgage market would come to a halt. The entire housing industry would just collapse. So Fannie Mae, Freddie Mac, Ginnie Mae are all aggregate buyers of mortgages, and they publish interest rates that are available on any given day. Now, it's not a one size fits all scenario, depending on the property type, your credit score, your down payment, your occupancy. There's all these different things that factor into the interest rates that are available, but it's not a spread off the 10-year. It's just it's a function of the 10-year. So they have like an algorithm that uses the 10-year as the basis that comes up with a bid for certain interest rates. And so what we do is we price them to a secondary market provider every single day. So that, again, they're the most competitive in the industry. But again, there's still portfolio products. There's still other options out there, but that's how we come up with our 30-year fixed mortgage, 30-year, 20-year, 15 and 10-year fixed mortgages. But if you are looking for direction of mortgage rates, the 10-year treasury is what to watch, but it's not a function to come up with what the interest rate would be. We do publish rates every single day. So it's not, if you see it online, it is available under certain characteristics.
Anyone else has any other questions? Feel free to throw them in the chat or raise your hand and we'll definitely address them. If you think of them later on tonight, tomorrow, we will be sending out a fully conclusive email that will include the presentation, the recording, a survey. Feel free to respond back with any questions you have. We'll send them out to the right panelist and you'll be able to get the right answer. All right. Thank you, Joe, for sharing your information.
Yeah, email me 24 hours a day. I am obsessed with my phone. My wife's going to kill me one of these days, but I have a terrible habit of just answering emails at all hours. So if you have a question, I'll be within a business day. I'll be in contact with you, and even on weekends, nights, holidays, I tend to get back to you as quickly as possible, especially if it's a question that I can answer relatively simply.